Okay, and welcome back, students. We're taking financial accounting, and we're working on this series of videos for the Chapter 2 problems, Group B, that were assigned in the Digital Study Guide. And I'm going to, this particular video, and there's going to be more than one part to this video, is for problem 2-39B. Two things. One, make sure that you take advantage of pausing and rewinding and watching again. In order to be able to copy down, journal entries, things like that, or whatever. Okay. Don't be afraid to rewatch the videos. Go ahead and watch theory videos, the theory videos for the chapter again. And if you still have any questions, feel free to telephone and speak with an instructor. However, with this problem, it says, Tom Slater opened an accounting firm on July 1st. All right. Let me get my pen here. It says he opened it on July 1st, and during the month of July, the business completed the following transactions. Okay, so our requirements are open or set up the following T accounts. So this is basically our chart of accounts. Now, what I'm going to do here is, because number 2 is journalize the transactions, which are these, and then 3 is we're going to post. So whatever our journal entries, we're going to post into those T accounts. And then it tells us to calculate the balance in each one of those accounts. And then it says prepare a trial balance. So the way I'm going to go about doing this is, remember, T accounts are nothing more than a tool. And you could use that T account in order to make a journal entry. You can use a T account to represent the ledger accounts. It has other uses. So due to space limitations here, what I'm going to do is I'm going to move down one slide, and it's an empty slide, and I'm going to move down another slide. Okay, this is like slide number 2, and here's where I'm going to start putting my T accounts. Okay, and the next slide that I have. So what I'm telling you is I'm going to be bouncing back and forth between slides. Okay, because I need to move information. It's just like you having several different pieces of paper on your table there. Okay, so my first slide, empty slide, will be where I'll be making journal entries, and I'll probably make an entry, make a second entry, and then erase them as I need. Okay, in order to have the space. The third slide will begin with creating my T account. So let me start doing that. I'm going to create cash, receivables, supplies, furniture. So I'm going to go cash, receivables, supplies, furniture, and then I think it was land. Yep, and land and accounts payable. So land, accounts payable. Then I know the next one is common stock, and I know dividends. And remember what I had said in previous videos, in that you really should have a retained earnings account, but since we're not closing these entries out, we're not closing our journal entries out, we're not closing our books, so we're taking the profit or loss, we would have to move that to a retained earnings account. You'll see that in the next chapter, so that's why you don't see a retained earnings account here, but just be aware that you should have a retained earnings account. Okay, so then we have service revenues, salaries expense, and rent expense. So we have service revenue, salaries expense, and rent expense. Okay, so these represent our general ledger accounts. Now remember, on a general ledger account, forms can be different, and I'm just going to quickly scribble in something here. You know, you can have a balance column here, which has a debit and a credit. Right, so we'd have two columns there. Then we have a debit column here and a credit column here. And we would have a date over here. And we have a description here. So you'd put in the date here, you'd write the account name, and then you would put whether it's a debit or a credit. On the next line, you'd put the next account title, and then of course debits have to equal credits. And what you're going to do is you would have a, you know, this balance column is a running balance. Okay, so I'm sorry, that's posting into the ledger account. Let me back up a little bit. When you make that entry into the ledger account, if it's a debit, then you keep the running balance for the debit. You put the next date, you put the next description, and if it's a credit, right, depending upon what the balance is, you would put the balance in the credit column. In other words, if this was 100 as a debit and then you have a credit of, say, 25, that means your balance here would be 75. Okay, so that's what a ledger account would look like. You would have the name up here of the account, and you'd have the account number here. You might even have a page number here. Okay, that's if it's in a paper form. And again, different papers, you know, different columns, but basically you're capturing the information. You're capturing the date and the account, whether it's a debit or credit. Okay, and of course a posting reference information. Now, because I'm using T accounts, I'm going to be putting the numbers in here, whether it's a debit or credit, and I should be putting the date to represent, you know, to know which journal entry that is. But since we have so few journal entries, I'm not going to put the date because I can actually look on this whole screen and identify my, you know, what entries belong to what. But if I had hundreds of pages of journal entries, you know, I would want to put in the date because, you know, if, let's say we go from January 1st to December 31st, and I want to look at an entry, say May 31st, okay, I can then look by the date and try to and be able to associate that particular transaction, whereas I'm going to have tons of information on here. So putting the date is important. I'm not going to do it here only because I don't have space. Okay. All right, so we just opened up our accounts, all right, and we set them up in T accounts. Now it says journalize the transaction. So the business sold 100,000 of common stock to open the firm. So, you know, and that's July 1st. So 7/1, I'm going to debit cash because I'm affecting cash, and we increase our cash on the debit side. So that's 150,000. I'm going to credit common stock for 150,000. Okay. I'm sorry, not 150, 100,000. So that's 100,000. Now, I'm not going to be going through a lot of explanation for these journal entries. Okay. I went into much more detail on problem 37 on making the journal entries. How to make journal entries is covered in the theory videos. You know, the thought process behind it. You know, number 38, you know, we basically did the same thing we did in 37. I, you know, left out a little bit more of the explanation here. You know, these entries are going to be pretty much identical to exercise 37 and 38, so I'm not going to spend a lot of time on this. I'm just going to make the journal entries. If you don't understand it, look at one of those other problems and go back and watch that video. The whole idea behind this problem for 39 is, yeah, once we have our journal entries, now what's our next step? Our next step is posting and creating balances and then creating a trial balance. So that's what the focus is on for 39. So I'm just going to make the journal entries and not, you know, spend a lot of time explaining. So watch the journal and, you know, watch me make the entry, pause the video, write it down if you have to, and start it up again. But you'll see the entries as if you're looking at them, you know, in the study guide, okay, in the solution manual. All right. So July 3rd, purchase supplies for 575 and furniture for 2300 on account. So on 7/3, I'm purchasing on account. Am I affecting cash? No, it's on account. So on account, since I'm doing purchasing, means I'm going to credit my accounts payable, and it was for 575 and 2300, so that's $2,875. And I'm going to debit. I purchased supplies for 575, and I'm going to debit the furniture, okay, for $2,300. And I can see that my debits here equal my credit here. Okay, so that's that journal entry. All right, July 5th, performed accounting services for a client and received cash. So I'm receiving cash, so I'm going to debit cash for the $1,600, and that means I credit something else, and I'm performing a service, so that's service revenue for $1,600. Next entry is prepare 7/8 is paid cash to acquire land for $28,000. So 7/8, I'm paying cash, so I'm crediting cash for $28,000, and I'm buying land, so I'm going to debit land for the $28,000. Okay, preparing tax returns for a client on account. So I'm preparing tax returns. All right, so this isn't. He owns an accounting firm, so if he's preparing tax returns, he's performing the service. So he's making a sale. Okay, and it's on account. So is he affecting cash? No. It's on account, so is that a receivable or payable? It's receivable because the customer is going to owe him. So 7/11, I'm going to debit my accounts receivable because I treat receivables the same way as I treat cash, because receivables are an asset, and I'm going to credit service revenue for $1,850. Okay, paid assistant salary, $575, so my cash is decreasing. So 7/14, I'm going to credit cash for $575, and I'm going to debit. It's an expense, right? Because it's for the operation of the business. I'm paying salaries, so I debit salaries expense for $575. Okay, a thought just occurred to me. This is slide. I'm going to make this slide 1 for journals, and I'm going to jump down to this empty slide and continue on here. Okay. All right. So 7/16, paid for the furniture purchased July 3rd on account. So I'm paying for it, so I'm decreasing my cash, and I'm not purchasing the furniture now. I made an entry on July 3rd here, okay, and that was on account. So I'm paying off my credit or my accounts payable entry that I created on July 3rd. So I'm going to, let's see, this is dated 7/16. 7/16. So I'm going to credit my cash for the 2,300, and I'm going to debit my accounts payable. I'm debiting my what was on account for 2,300. Right. Right. Let's see. Number 19. Dated 19. 7/19 here. Received $24.50 for accounting services performed. Okay, so I'm receiving the cash for $24.50. Okay, so 719. So I'm receiving cash, so I'm going to debit my cash, and that was for the amount of $24.50. And I'm crediting, I'm performing services, so service revenue for $24.50. Right, billed a client for $3,300 of accounting services. So am I affecting cash? No. Right? Am I affecting receivables or payables? Yes, I'm affecting receivables because I'm billing, so it's on account and it's for a client, so that's a receivable. So 7-723. So I'm going to let's see here, debit my accounts receivable for $3,300, and I'm going to credit my service revenue for $3,300. Okay, it says for the 28th, received $1,450 from client on account. So am I affecting cash? Yes, because I'm receiving cash. So 728. So I'm receiving cash. My cash is increasing, so I debit my cash for the $1,450. And what is it for? Well, it's a payment from a customer on account. Well, they're paying on their accounts receivable. So $1,450. Paid salary, paid secretary salary $575. Paid rent expense $1,720. Paid $2,500 on dividends. So I'm going to do the expenses first because I'm paying the salary expense and I'm paying the rent expense. Okay, so we're going to treat that as two different entries. Right, we could treat it as, well, it's better to just treat it as a separate entry. So I'm going to credit my cash because cash is going out for $575. And that means since debits have to equal credits, I have to debit something else. So it's salary expense for $575. Then I have $731, same thing. I'm going to credit cash for the rent expense of $1,720, and I'm going to debit rent expense because it's just an expense. I look in my expense accounts and see what accounts I have and find the appropriate one since I paid for the rent expense. And then and I'm just gonna let me just do it over here, try to squeeze it in. 731, I'm paying out cash, so I'm crediting cash for my dividend, okay, which was for $2,500. I have to debit something else, and since it's, I can see it's a dividend account, so I'm going to debit the $2,500 to dividends. Okay, all right, so there's all my journal entries made. So I've set up the accounts here, and I just journalized the transactions. So now it's going to ask me to post the transactions to the T accounts that have been set up for you. All right. So that since I'm at 20 minutes, I'm going to stop right at the moment and pick up with this problem in the next video.